Hello, listeners. Welcome back to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Thanks to the miracle of antibiotics, I am finally feeling like myself again and happy to bring Rob back on for our weekly chat about the biggest developments in geopolitics and markets. Very briefly, if you want to talk more about our investment management services, about our consulting and research services, or about me speaking at an event that you have, or you just want to recommend guests for the podcast or things that I should read, email me at jacob@cognitive.investments. Otherwise, no further ado from me. Cheers and see you out there.
Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor.
All right, listeners, we're at it. Usually we like to wax philosophical and go on for hours and hours. Not really, but Rob has a hard stop at the top of the hour. So we've got 45 minutes here to talk about what's going on this week. Lots of little things going on. And I don't know, last week we sort of started off the beaten path with Brazil and interest rates and wended our way back to some of the big things happening in the world. This week, because it's kind of been a shitty week in the market, sort of overall, more EU recession news is kind of there. I mean, I'm hearing more fear, doom and gloom. Oil's creeping up. I think it was 92, 93 a barrel for Brent crude as we're talking here on Thursday. So maybe just give us sort of the lay of the land from the top down, Rob, and then we'll sprinkle in kind of stuff that's going on throughout the world, because it's certainly not a quiet week in the world. It's just sort of you sort of throw a dart anywhere in the world right now and something is happening. So.
Well, I think the two big developments from a macro perspective in the last week or two have been the decline in the euro. So the euro is now close to 1.06, which is down, not huge. It was at 110 about 2 months ago. But I think it shows how expectations around the euro and the eurozone have changed, and more importantly, how expectations around the U.S. dollar and U.S. monetary policy have changed. So, we try to avoid giving too much self-congratulatory back patting here, but we will do a little pat on the direction of monetary policy, because this is something that we've been droning on about for over a year, how we think the expectations have been too low for the direction of interest rates in the U.S. And since last week when we spoke, and this week we had the Fed meeting, which was decidedly hawkish, and I think there's some interesting tidbits in there that we can get into if you want. But that's one of the bigger developments to happen from a macro perspective, for sure.
Well, I just want to weigh in there too and say I don't think it's first of all, we also do plenty of, hey, this is what we got wrong here. So I don't think it's out of bounds to say, hey, this was something that we did right on. But I think this also goes back to, and we'll do some more podcasts thinking about thinking in our process and things like that. But I think this is a good time to remember also how these sorts of viewpoints work. Because if you just follow the media cycle every week or every quarter, we lurch from, hard landing to, everything's fine to, oh my God, inflation to this, that, or the other thing. But if you're having a truly macro point of view, I mean, I was saying in talks at the beginning of this year to audiences, hey, I think if you look at the dollar over the last 30 years, like we're still relatively early in what looks like an uptrend here. So probably over the next 12 to 18 months, you're probably going to see much higher dollar strength than people are expecting. And for the first 6 months of the year, that didn't look so good. Or even we should say for the first 8-9 months of the year, that didn't look so good. But I was saying it's a 12 to 18 month thing. And there's a difficult thing where if you're seeing data that contradicts what your view is, you have to be flexible enough to change your mind and come up with a new viewpoint. But if nothing has fundamentally changed but the media narrative, or if you still think that all the fundamentals are going in that direction, sometimes you have to stick to your guns and say, no. The macro view here is going to get played out over 12 to 18 months. And when we say it's 12 to 18 months, just because 6 months in, things don't look right, that's fine. So in some ways, I think it's an important lesson there too, because if you're only thinking about the media cycle, things may seem topsy-turvy. But If, like us, you sort of put your flag in the ground and said, this is what we think, and we haven't seen anything yet to change our minds, like you can sort of see how the macro is developing. And I think that's the hardest part of macro. The hardest part of macro is, okay, here's the assessment, and then when do you stick to it? When do you move away from it, and things like that?
Well, this is a good opportunity to explain a little bit how we actually do this, because so internally, because what you just said is literally how we lay it out visually in our knowledge platform. So for those who don't know, we have our internal knowledge platform, our research database, everything that we use to share and bring all of our insights together and then make decisions around it. And we sell access to that and to our research as part of our research and consulting CI Perch business. So go out now and sign up in the next 15 minutes and Jacob will send you a personal videogram. But just getting to what you were saying, Jacob, it's important to point out that that's exactly why we organize that the way that we do. And literally what we do is we have a table. And in that table, it says, what is the consensus view right now of all of these major important factors, including the dollar, interest rates, US macro, European macro, Chinese macro, that sort of thing. And then for each of those, we say, do we have a variant view? Do we have an alternative thesis that we believe in that's sufficiently different from the consensus view to matter? And that's really important in itself, because most places don't think that way. They're not thinking in terms of how we differ from consensus. Maybe that's our training as short sellers, because we're constantly thinking about what does everyone think to be true, and then what do we believe that's different, and what is the catalyst to get them to adopt our belief. But however it emerges, that's nonetheless how we do it. So we have this table, consensus view, what is our variant view? But then getting to your point, for each of those variant views, we have, well, what is going to disprove our variant view? Ahead of time, we say, if this and this and this happens, then we're wrong. And we have to abandon this view. And the other thing in that table is what's going to get other people to recognize what we think is right. What is the catalyst, the psychological catalyst, for our view to become the consensus view? And without going on and on, because this is getting philosophical, I think if you're not doing it that way, then you're not doing macro right in many ways. And on this point with the interest rates and the dollar, we have sort of the gratifying experience now where the last 8 or 9 months we've had in the table, hey, the consensus view is that rates are going to come down, and we're more hawkish, and here's why. And now we're in the nice position where this week when I update it, and every week I update it with what's the new data that's come in, how is it adjusting our assessment at the margin. Now I have to consider, hey, is our view now the consensus? Has the consensus adopted our view, and what do we do next?
Well, I want to harp on this for just one more minute, because I think you're exactly right. It's not that most people don't do this. I don't think anybody does this, and I don't think anybody does it from two different angles. Most geopolitics shops or geopolitical analysts out there are not doing this. They are out there to sell books or to sell clicks, or sort of talk about what does the future look like in very amorphous terms, and they can change their forecasts however they want to make it seem like everything was fine, or they got their clicks so they don't worry about it. For us, no. Like when I say something out here and I'm wrong, our clients are losing money. I'm losing money. My money's invested in our strategies. Like it's a real tangible thing. When it's in the knowledge platform, like you say, and it's wrong, it jumps out off the page, and it's like, okay, we really do have to change here because things are working that way. I think the same is true of investment advisors. I got asked, I was speaking at an event yesterday, and a guy was saying, oh, it's so interesting, you work at this investment firm. My buddy or something or other, he is a small investment advisor. He runs a small shop, like 500 million AUM. It's been a nice little business, but I get his weekly letter and he doesn't talk about any of the things that you guys talk about. And I said, I'm sure he doesn't. I'm sure it's just updates updates on interest rates for that week or currency developments and things like that. And I don't think it's the psychology of short sellers. I think it's just really hard work, and you need a full team. You need different ideas that are looking at the world in different ways and enough comfort with each other to challenge each other and yell at each other, and then still be willing to have a drink with each other at the end of the day. So anyway, enough philosophy and why we're different than anybody else. Tell me why you think the Fed is suddenly waking up and sounding a little bit more hawkish, which is what we expected, but which is definitely not what everybody else has been expecting here over the past 9 months.
Well, they're recognizing, really, that as the data's come in, Jay Powell himself said it in the press conference. The data's been much better than we expected. The economy has remained much stronger than we expected. The durability of employment markets, the durability of demand has been much higher than we thought it could be. That is technically when we say, what is the data point that gets people to recognize, like, those are the data points. But I think it's worth talking, enough self-congratulations. So here we are, and the consensus has moved. And I think it's worth talking a little bit about where not only the Fed, but also the ECB find themselves right now, because one of the other things that we do that almost no one else does is I actually read everything that these people say. Almost no one does that. And it's very easy to do so. You can get all the speeches, you can read all the papers, and there's a ton of stuff going on.
It's easy to get access to these things. They're all terribly boring. So it's not like a joy to read these things at all.
Well, yeah, it's not terribly boring. I think it's really interesting.
You've drank the Kool-Aid. You've been reading it too long. This reminds me of, I used to, back in my Stratford days, one of the things I did is I would work with sometimes people who had English as a second language and things like that, and I would work with them to translate their pieces into proper, and then we would post them on the website. And I got to one point with one analyst who, she was absolutely brilliant. She just had a lot of trouble getting from one language to the other. And it got to the point where I understood her sort of broken English better than I was understanding like the normal articles that came in. And it was just this really weird moment. Anyway, so you have goggles on if that stuff is entertaining to you right now.
Oh no, this is good stuff. I think thinking about where the neutral rate of interest is, it's like, maybe this is my Catholic background, all these sort of obscure notions of the Trinity, and is it God and a man, or is it man and a God? What is the neutral rate of interest? We don't really know. It's like the Holy Spirit of monetary policy. You can't really define it. No one knows what it is. You just have to kind of grope your way around it. But
sorry, this Jew just fell asleep. Can you recap where you were just a second ago?
But the reason why it's interesting, I think, and let me try to put some human touches around this, is because I think it illustrates to some extent the dilemma that both Europe and the US face. And on the European side, let's talk about that first, because last week we talked about green policies and some of the contradictions and difficulties that they bring as far as supply side constraints and stuff like that. And it's interesting because if you get a chance to read one thing, there was a conference in Paris 2 weeks ago, and it was about nature-based risks, which sounds extremely odd. And in fact, if you read the speeches given by the central bankers at the conference, half of the speeches are dedicated to explaining why this isn't such a weird idea. Like, we know this is crazy, but really you should think about this. But in this sort of weird, obscure conference of central bankers, one of the things that they talk about is the notion of ecosystem decay, and that as a hidden cost in the economy that must be recognized. And this is a common theme in Europe, whether you're talking about carbon emissions, whether you're talking about, nature-based risks or ecosystem destruction. They're trying to create a new economic model on their own in many ways. They're trying to create a system that recognizes these costs and tries to eliminate and alleviate these costs by incurring, big expenses to do so, through green policies, through restrictions. And in many ways, the way that they frame this to themselves is that this is Europe taking leadership in the world in a way that the US will never do. And a lot of this is, I think, European, I don't mean this in a negative way, but European feelings of superiority, because if you read the head of the Bank of France actually said, the US, they're having a political meltdown and they can't do anything. This is Europe's thing to do, and it's moment to take leadership. And that's really important and interesting, and it's not just silly philosophy, because if you look at what the ECB is doing with interest rates and how they're taking this view of, hey, the supply side is really going to be constrained. The neutral rate of interest is much higher than anyone previously thought, in large part because of this. It has real consequences. And to see the euro hitting new lows, even while the ECB is getting more and more hawkish, I think it shows that investors don't really buy into this, that they're sort of understanding that the ECB is trying to strangle the demand side of the economy, much more than perhaps it's warranted, because they're trying to squeeze the European economy through these bottlenecks that they view. I don't know if I'm explaining that well, but
no, you are, and it actually, we didn't chat about this beforehand, but I'm glad you brought it up, because one of my favorite, I actually don't listen to that many podcasts. When you're doing podcasts yourself, like doing podcasts yourself, it's kind of hard to, I don't know, I don't listen to that many, but one that I do make time to listen to is David McWilliams, who's a former Irish central banker who now has his own podcast, and you can look him up if you want to. And he had two really interesting podcasts over the last couple of weeks. The first one is only tangentially related to what you just talked about, and it's about Vienna and the Austro-Hungarian Empire, and why Vienna doesn't have a housing crisis because of decisions that they made in the early 1900s about public housing there. That was an interesting one. We could talk about it some other time. But the one that was more interesting was he was talking about the ECB in general and why the ECB was more hawkish, and he brought up a distinction between the ECB and the Fed and other central banks that I didn't know about, which is that the ECB only has one mandate. The ECB's only mandate is to control prices, and that's it. There's nothing else. It's sort of a purist, like, we have to control inflation. The Fed has two mandates. It is to control prices and also to maintain the general stability of the economy. I was poking around at other central banks. Brazil, for example, also has the dual mandate. It's prices, but also ensures sort of macroeconomic stability. And one of the things that he was raising on his podcast was, because the ECB has that sort of single-minded focus in general, maybe you're going to see some disjuncture between how the ECB is viewing things, because they don't have this responsibility for macroeconomic stability. That's beyond their purview. The bureaucrats don't think that way, whereas we do maybe in places like the United States, the UK, coming from completely different banking traditions. So I don't know. I wasn't aware of that, and I thought it was really interesting. Does that resonate with you at all, or do you think that he's going too far with that?
I think it does resonate. I think it also gets back to sort of the idea of elite policymakers in different places. And if you look at, in many ways, the sort of currents of elite opinion in Europe, one of the main themes that it likes to embrace is the notion of restraint. Like, we have to live in a world where you can't do everything you want, where you can't consume as much as you want, because it's not sustainable. That's not proper. It's a very sort of, it's a negative spin on sort of the environmental predicament. And that sort of applies to monetary policy too, because if you don't have an employment mandate, if you don't have a growth mandate, then it's easier to channel that mentality into monetary policy, which is, hey, we're going to tighten the economy because we have to bite the bullet. You have to bite the bullet. I don't think Christine Lagarde the
central bankers are never the ones who bite the bullets themselves.
Yes, exactly. As they say, the champagne socialists, I think they call them. But you can see how without that mandate, it's a natural avenue for that mentality to be expressed in that way as well. And I think that's one of the most interesting things to watch in Europe, because you can see the backlash forming against that in many ways, whether it's Rishi Sunak in England sort of dialing down their goals, whether it's pushback against policies in Germany, whether it's the right wing in France openly saying that our main platform now is going to be against restraints on consumption and green policies. That's something I think that bears a lot of watching.
Yeah, and we're not going to leave Europe yet because I want to use this as a good segue. But just before we leave the sort of general macro inflation thing, I also just want to point out, I put this on the platform yesterday, that Thailand's central bank raised interest rates it was a surprise to Reuters and Bloomberg, folks that they surveyed, raised interest rates 2.5% on higher prices in Thailand. So you can now throw Thailand in with Brazil and Nigeria and the Philippines and all these other countries that we're now keeping track of where inflation is starting to creep up. And I was talking about higher energy prices and higher oil prices here at the beginning of the podcast. I'm beginning to think that those warnings about higher prices that we've been on the podcast here banging on the table about for the last, month or two, I'm a little bit afraid that we're seeing that. But let's move a little bit to, did you want to say anything about that, Rob? Or do you want me to segue into some?
Segue away.
Well, let's segue a little bit into some European politics because, you said it's their feelings of self-superiority. Accompanying that is probably a great hypocrisy because Europe is really not leading the way here in any particular way. And there's a lot of sort of disturbing political things that are happening this week in general. And it's one of these death by a million cuts. So Germany imposed border checks with Poland and the Czech Republic. Not permanent border checks. It's not going to be every single person who's coming across, but temporary border checks because they're worried about refugees and people claiming asylum coming into Germany. France had already done that and has been clashing with Italy about that. Italy also in the news this week. Italy's government presented a budget yesterday, which I think it was 5.2 was what the fiscal deficit was going to be, much higher than predicted before. They're also looking at more anemic growth rates. They've had a nice growth run the last year or two, and you have really been on the front curve of talking about that, but they're not projecting growth now in the year ahead, and they're talking about fiscal deficit, which is going to bring them right into conflict with the EU in general. While all of this is happening, we talked about Nagorno-Karabakh last week. That conflict is not going away. So it's 30, 40, 50,000 refugees have streamed out of Nagorno-Karabakh going to Armenia. You've got Azerbaijan now saying, actually, there's also this exclave inside of Armenia that we don't have direct access to that we're now sort of eyeing as well. Western Balkans, Kosovo, and all that stuff is also sort of popping up. So it's nice to say that, and the last thing I'll just say here, you mentioned Sunak. The British are trying to negotiate a free trade agreement with India. And you might have thought that this Canada-India spat was going to lead to some Five Eyes, everybody rallying around the Five Eyes and all those countries getting together and pushing back against India. Not the UK. It looks like they're pushing forward. And what Politico is saying is that they're throwing out environmental considerations and labor considerations, like Rishi Sunak just wants the deal. And I'm not going to say whether that's right or wrong. I mean, props to somebody who's thinking very, very hard about just sort of naked national interest and not caring about sort of the rest of these ideological things. But just you put all that together, not only do you not see Europe leading, you're seeing Europe in general and just sort of the Eurasian landmass in general, which the European peninsula and Western Europe is a part of, lots of little cracks and lots of disagreement from migration to monetary policy to free trade with other countries. It's not a particularly good week if you are, like I have been, kind of bullish on the European Union's prospects.
Yeah, I think part of that is because it's always easier to maintain cohesion when there's growth. And I've referred to this guy a few times on the podcast in the past, but there's an academic at Harvard named Benjamin Friedman who's written some really interesting papers and one very good book on the subject where he's examined periods in the past where you had economic growth or real income growth, real households income growth, and how that impacts social policy, people's outlook, politics. And there's a very clear connection. When things are growing, it's much easier to get people rallying around a certain sort of centralized idea. When it's the opposite, then you see what you're seeing now. And I think this is one of the consequences of not putting out a positive pro-growth kind of message. The message is one of self-flagellation. And that doesn't work to get everyone rallying around, because when you're distributing costs and not distributing goodies or benefits, that's just a very difficult situation. So I think we're right to sort of downgrade, at least until that changes, if it does change, some of our more hopeful expectations for the EU. I thought, and we thought, that the Russia crisis, that the feeling of crisis would spur sort of more of a optimistic is not the right word, but more of an active and clear path for Europe that they could rally people around. But it does not appear that it looks like that is fading. I don't know if you agree.
Sort of. I mean, there's a psychological thing here happening, and this is in our name, cognitive investments, because we say, yes, the fundamentals matter and we know them better than everybody else, but also psychology matters here too. And when you look at, previous periods of growth are usually accompanied with optimism for the future. And to your point, if you're not giving people optimism about the future, they probably are going to go into self-flagellation land. I will say that, the war has been going on now for over 2 years. The COVID pandemic was 3 years ago, if you can believe it. Space-time makes absolutely no sense. And the EU did come together in major ways, like the first joint EU bond issuance. That was a big effing deal. You've got Germany turning away from Russia and finding alternatives for energy and things like that. The amount of money that is going to be spent in places like Italy and like Poland over the next couple of years, that's already approved and already in the budget. All of those things are fundamentals that are pushing things forward. But I think you're right that as the war has stalemated, and as economic prospects have gotten a little bit bad, and as the cumulative impact of, oh shit, like energy insecurity is going to be with us here for the next couple of years because of that bet that we made on Russia. It was never going to be the German grandmothers freezing in the street, but it was going to be a slow bleed of 3 or 4 years of higher energy prices and insecurity and competition and all these other things. You put all that together, and there is this sort of pervasive psychology that things are not going to be very good. The only thing that I would turn around and say is that the Russia-Ukraine war is by no means over, and it's by no means a stalemate. So in the last week or two, Ukraine has been trumpeting, no, we finally have broken through some Russian defenses. And we think if we can get to Tokmak, like we can threaten Russian supply chains to Crimea. And if we can get all the way to the Sea of Azov, then we can cut Russia off from Crimea entirely. And then maybe we can talk about coming in and out of the Black Sea. And you've got Ukrainian ships moving in and out of the Black Sea with the Russians sort of sitting there with their empty threats in their hands. And the reason I bring that up is because, and I think we mentioned this on the podcast last week or the week before, just remember that France has gone from trying to negotiate settlements between Kyiv and Moscow to get the war over to, no, Kyiv must win. Ukraine must win. And I think Europe is thinking about, what does Ukraine integration into the bloc look like? And I think a lot of this, in some ways, it really hangs on what Ukraine is going to do. If Ukraine can make some real progress here in the next year or in the next 12 months, if Europe has an issue of integrating Ukraine into the bloc, that is going to require a lot of joint cohesion and conversations about, the future of European politics and all these tough things about how to reform EU decision-making and things like that. If it's a slow, attritional stalemate of a war for 3 years and Europe is squabbling over the same stuff over and over again, and there's more migration because of what's happening in Africa, that's sort of the doomsday scenario. So I don't know, that might be a little bit too simplistic, but I think that next thing that might push the EU into action is, okay, well, what happens if we do have to integrate Ukraine in? What happens if Ukraine really does push back against Russia? And that's not a sure thing at all. And again, you were ahead of this too when you were in Ireland a couple months ago, and you said people are talking about migration. I know you said that it's hard to spread out the goodies when growth is slowing down or when prospects are not good. But generally, the Achilles heel of the EU has been migration. That's the thing that they can't seem to figure out and get on the same page about. And you were talking about sentiment in Ireland 2 years ago. Now we've got border checks going up. We've got a really, really dire situation in parts of sub-Saharan Africa, and those migrants are eventually going to stream northward as well. If you go back to sort of the fall of Angela Merkel and Brexit, all those things go to real migration issues, because I think you can paper over like debt and things like that. It's much harder to paper over there's 10,000 people trying to get into your country who want to use your infrastructure and things like that. So I don't know, I'm rambling a little bit, but you can tell I'm searching for the silver lining, and it's a pretty tortured way to get to the silver lining. It's the one thing I will say, and this is the last thing I'll say to stop the rambling, was in our forecast for the year, the geopolitical forecast we put out for the year, we did say this was a critical year for the EU, that we were not going to sit here and just be Europhiles for the rest of the decade. If we didn't see meaningful progress in the European Union this year, we were going to have to revise our views. And as of September 28th, this isn't enough. I'm not feeling particularly good about the long-term view. And if things keep up this way towards the end of the year, it's going to be a major revision process probably at the end of the year for us.
Yeah. At the same time, though, I don't want to be too down on Europe, because I think a lot of the things that I point out as negatives, sort of, this feeling of the self-flagellation, the green constraints and that sort of thing, a lot of that has the potential to spur positive change as well. Because remember, this is how Europe views itself as different and better. And that's a good thing. I don't mean to say when they're self-superior that it's necessarily a bad thing. Everyone has, a superiority complex. I mean, we literally call ourselves the city on the hill, like, my God. So I think it's okay if they're a little self-superior as well. But sort of having a consistent and coherent view of what it is that Europe is, what it is that makes it different, a vision of the future, a better economy, one that runs on, low marginal cost energy, one that, emphasizes environmental costs and takes them into account, because it really is a long-term cost. Like, look at China, look at what they've done to some of their natural resources, some of their water supply, their agricultural lands. Like, this isn't just make-believe. Those are real economic problems. So I don't mean to really paint a negative view necessarily of Europe and say, because they're doing this, it's not good. I think there's still a scenario where this ends up galvanizing sort of visions of the future that are optimistic and really positive for Europe. And as someone who lives in Paris, I can tell you, in the last few months, I went to Dublin, which is about as boomy of a boom town as you can go to. Dublin feels like what I imagine London must have felt like 20 years ago. And I just went to London, and yes, it's still enormous. Yes, it's still multicultural, but it doesn't have the same sort of energy. And when you talk to people there, everyone's complaining all the time about everything, about the, about the costs of everything, about the congestion charges in the center of London. And it doesn't, even though London is still a behemoth, it doesn't have the feeling of at the margin it's moving in the right direction, whereas Dublin is a tiny little place. But my God, that has a feeling like, wow, there's hope here. People are excited. They're coming here. They're doing things. They're building things. And then Paris at the same time.
I think that's exactly the point. Just to interrupt for a second. People are going there because Dublin is now the English-speaking interface for the rest of the European Union. London gave up that title. So when you're looking around Europe, it's maybe not your Parises and your Berlins. It's where do people want to go? Where are people going? Where is there increasing diversity? Because you have 1 million Ukrainian refugees streaming in. This is why Poland is the one that says, hey, we want a nuclear strategy. And 2 weeks later, they're cutting the ribbon on, hey, we're building the nuclear reactors. Like, imagine that in the United States or Germany. Anyway, go on with your point about Paris.
No, but that's true. And yeah, I mean, I was just going to say Paris. Everyone, I think especially if you're in the US, I get these, my father sends me these news articles all the time where it's like, riots in the Parisian suburbs and it's, it's the end of the world. Like, just all the negative stuff. Paris is a boom town. There are tower cranes. I always like to use the tower crane index, like when we're doing field research and you go to a new city. I remember going to Austin in 2015 and it was like, oh my God, there's tower cranes as far as the eye can see. Paris is like that now. If you go from the airport down into Paris proper, all of the north of Paris is just one giant work site. That's a positive thing. They're building a lot of stuff. There's stuff in the works, not to be, too vague, but like that's deep as you need to go. They're doing things. People are moving there. They're building significant infrastructure, housing. A lot of this is around the Olympics. We've spoken before about their attempts to roll out these eVTOL drone taxi services that they want to have in place in time for the Olympics. So just 2 weeks ago, the FAA in the US just gave the first approval to even start testing the prototypes of these things. And Paris wants to have a working network, and they've built out some of the heliports already in less than a year. So it's not all doom and gloom, and there's elements of like you gave with the Polish example, there's an ability to get things done when there's the will, and in certain places that's happening. So it's not a black and white thing. I think it's just uncertain how it's going to turn from here.
Well, yeah, the way I would sum that up is, and again, like I'm not deviating from the bullishness yet. I'm just saying the evidence is accumulating, but it was more of a EU as a bloc we're optimistic about. What you're talking about is pockets of the EU doing really well and pockets not doing very well, which that can be true in the overall thesis about, but the EU is going to come together and Brussels is going to be leading this. Like, that's actually not there. So in some ways you could say that what you just said is even more evidence of what we're talking about, because it's those places that are on the periphery, that are doing their own things, that are not waiting for Brussels and not waiting for EU funds, that are just making decisions that you're actually seeing the progress. We've got 10 more minutes. So let's talk about one more thing here. This might have gone sort of unseen maybe for most people, but it was kind of a big deal to me. And I don't know if you saw this, Rob. Mitsubishi Motors in Japan has decided to withdraw from automobile production in China. And that sort of stopped me in my tracks. And it stopped me in my tracks because Japan, maybe more so than any other country, Australia can lay claim to this too, is one of those countries that economically has huge exposure to China, and from a security perspective is terrified of China. So you've got Japan where they're trying to maintain economic relationships with China, and a lot of Japanese companies have been talking about setting up parallel supply chains where they have a China-only supply chain and then an everybody else in the world supply chain. They think it's worth it to build two supply chains rather than turn their back on China. That's how important it is to them. But here you have Mitsubishi Motors saying, all right, we're just going to have to give up on China anyway. And some of this, I think, has to do with, we've talked about the China EV boom and how, Chinese consumers, well, first of all, the Chinese government wants them to buy all these excess vehicles that they've made because probably not everybody else in the world is going to buy them. Maybe it's just sort of an idiosyncratic thing in the automobile sector, and Japanese auto companies are not going to be able to compete because of that glut of supply. But that, I don't know, for Japan to me is the country that is trying to pioneer this approach of, can you be in China and also be in the West at the same time? And if companies like Mitsubishi are saying, not really, we're going to have to pull out, that to me was a really interesting moment here, and we'll have to see how it reverberates throughout the rest of Japan's economy.
Yeah, one thing about Japanese autos, which I think is interesting, is it'll be interesting to see how they navigate this change to EVs, as we've talked about. And China is the number one test laboratory for this, because they've taken such a lead. But not only, when Japan talks about having separate supply chains for China and for the rest of the developed world, it'll be interesting to see how they're going to adapt to that world, because the Japanese advantage, the thing that they are so great at, is in many ways sort of process engineering. And I say this all the time, but building a car traditionally has been the apogee of industrial organization, because it's a consumer product. It has to look good. It has to be well designed. It has to be cool. You have to come out with a new product every year. But it's such an incredibly intricate industrial assembly line process. And everyone knows about the Toyota production system and all the innovations that Japan has made there. Well, the problem for Japan is EVs aren't really like that. Part of the reason why Tesla was able to do what they were able to do and emerge as a new player is because EVs are just much simpler. They're much easier to make. There's fewer parts. They're easier to put together. There aren't as many points of failure. And it's opening up the door to new entrants. So on the Mitsubishi news in particular, I think it's an interesting area to watch, specifically around autos, because will Japan be able to maintain its historical position in that specific industry? And what does that say about all the other industries that Japan is a leader in? Will they need to get their consumer-facing mojo back, because they've not had it for a very long time? And if they can't, what is their place as a sort of capital goods provider, as a more industrial-focused technology nation? I don't have any great answers for that, but it's just sort of an open question.
Well, the answer to that is that a Japanese empire in Southeast Asia would be a real good way to fix some of these problems that they're experiencing. But I think we've seen that movie before. I'm going to just breeze through four things and let you give a last word on any one of them if you want, because we got to get you out of here. Four other things that I thought were interesting that have happened sort of in the last week. Number one, Nigeria's big labor unions are calling for an indefinite strike over fuel prices and on the elimination of some of these subsidies that the new Nigerian government has been pushing through over the last couple of months. Chase, if you're listening this far into the podcast from Pinecone, hope you aren't still optimistic about Nigeria. That looks pretty bad to me. And again, watch as the instability in the Sahel starts to extend out to these more populous, more important countries in Africa. I think that's a trend you're going to see more of. Number two, if you're having trouble sleeping, and even if you're not having trouble sleeping, I think reading the entirety of the Indian External Affairs Minister's speech at the UN is worth reading, because it's a full-throated defense of India, not just from all these allegations that happen in Canada and things like that, but an Indian view of multipolarity and why India thinks that the West is full of crap when it talks about the rule of law. Nothing earth-shattering there, but just a really sort of articulate expression of that idea from the Indian government. The head of China Evergrande is apparently under police investigation. He has not been charged with a crime yet, but we're moving in that direction. Interesting to see the China real estate crisis go from economic property issue to maybe we're going to start arresting people here. And then last but not least, lest you think that I'm only focusing on the rest of the world, in the same way that I couldn't get enough of the SBF story, Sam Bankman-Fried, I cannot get enough of this Bob Menendez story in the United States. Senator Bob Menendez, who lots of strange allegations about corruption, and they found gold bars in his house, and was he helping the Egyptians with arms sales and things like that. So not to say that the United States is doing particularly well here either, but I think it is especially concerning because as we go into U.S. election season, no matter what you think about Donald Trump or Joe Biden, when Donald Trump gets up there and thunders away about draining the swamp, and when people talk about not trusting Washington, these allegations about Bob Menendez and finding gold bars in his home and stuff like that, that's what they're talking about. Like if you've got senators who they're the head of the Foreign Relations Committee and suddenly, oh, you're under investigation because you were helping the Egyptians get more weapons here, should sort of send a shiver down your spine for what that means for U.S. elections and the election cycle that we're just going through. So, Rob, any parting words on any of those things or anything else you want to give to the listeners, or do you want to run and say goodbye and we'll catch up next week?
I think just a final thought on the last point around the U.S., because it ties into the notion of what we were talking about earlier, which is presenting a vision of the future that's positive and rallies people. And I was looking at the polls last week because we are heading into a new election cycle in the U.S. And it's just remarkable and depressing how the vast majority of ordinary Americans don't want either of these guys. They don't want Biden to run again. Like, even though people, not to get into politics, but the consensus view is that he's probably too old, and we should have fresh blood. And then Trump, everyone, kind of knows what the situation is there. But I think this is an interesting litmus test from an economic and a more structural standpoint on the U.S. because, the door is open. The door is open for a political entrepreneur to come in and present a vision of the future that's actually ennobling and inspiring and technology positive, and not, the AI is going to kill us all. Even the landmark and arguably the most positive program that we have pushed out in the last 5 years is the Inflation Reduction Act, which is having major impacts on CapEx and investment, and I mean it's been a huge success in many ways. but it's called the Inflation Reduction Act. Like, how stupid is that? Even the fact that we even have to take this program, which is, future focused and investment oriented, and essentially cloak it in a name that is not future oriented at all. It's fix the inflation. I don't know if I'm explaining that well, but like that shouldn't be the case. And that's, I think, something to watch for is, will we get another, John Kennedy saying we're going to put a man on the moon in 10 years or whatever the equivalent is in the modern age. That's the opportunity seems to be there. All these politicians on both sides of the aisle, like, my God, what a bunch of freaking schmucks.
Yeah. I've been wary of addressing this on the podcast. I've only just started doing this on some of my speaking events, because the joy of being an American geopolitical analyst is usually you don't have to talk about U.S. domestic politics, but it's getting sort of hard to avoid it because the U.S. is so unstable and because we are so kind of stuck in the mud and because that's going to affect things globally. So we probably need to do a whole episode on that. I will just say that the one politician who has some street cred who is trying to do what you're talking about right now this is why RFK Jr. is interesting. Now, he has a lot of baggage and his voice sucks. It's sorry to him that he has that rare disease or whatever, but like he sounds like a croaking frog, and that's going to be hard to communicate a charismatic message with that voice. I sympathize with it, having had to give speeches the last week or two with my voice. Like, it's a hard thing. I can't imagine doing that the rest of your life. But he is the one that is trying to push that message. And I don't know, maybe he'll cut, but I absolutely agree with you that there is an opening there, and that most of mainstream U.S. politicians are not talking about it. But that's a topic for a much bigger time, and I'm sure we'll have to piss off I hope that when we do our podcast about American politics, my goal is that every single listener walks away angry, because if you didn't walk away angry, I want both sides to be wanting to self-immolate, because if you only do one side, you probably haven't hit it well enough.
Well, just the one final thing I would say on this before we defer it to another day is, I think, and it could come from a Republican, it could come from a Democrat, I don't know, but I think I'm very optimistic that someone is going to come and have a very interesting set of optimistic policies and a plan, because getting back to the Benjamin Friedman research that I mentioned earlier, these things move together. And one of the most remarkable and wonderful and positive things in the US right now is unemployment is 3.5%. Real wages are rising for the first time in 40 years. Like, there are a lot of the things that fed the negativity and all the bullshit of the last 20 years, a lot of that has been changing. And if you look historically, that's when the rhetoric tends to change, to follow that and to reflect that. So that's something to watch, but it's regardless of what your politics are, and frankly, I don't care. For the listeners, it's something to be positive about for the U.S. if it does indeed happen.
All right, well, that's about as good a cliffhanger as we can have. So, Rob, go do your meeting, and we'll check in next week. Talk to you soon.
Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.